Hey everyone, it's Evan here from the Trade Risk on Tuesday, May 8th, here with a midweek market recap video. We're going to cover all the major markets and the current market environment. So let's jump right in here with the S&P 500. We're looking at the cash market. We're looking at a weekly time frame. We always like to start with that big picture view, and each bar, each candle here on my chart represents exactly 1 week worth of trading. So when we look at this week's action, it is only Tuesday right now, but we are up slightly here on the week, about 0.25% to the upside. And more interestingly, if we look over the past 4 weeks worth of trading, or going on the 4th week of trading now, you can see this market has just been stubbornly moving sideways here with a nice magnet right around this 2670 level. We closed here 3.5 weeks ago on Friday, the 20th of April. 2 weeks ago, we closed in this area. Last week, we closed in this area. And so far, we are still trading in this same zone. The fast 8 and 20 period weekly moving averages are flatlined exactly right here, right on top of current prices. And we still have this same pattern here on the longer term weekly chart in the S&P 500 of lower highs and higher lows in place. So we still have not made a definitive move outside of this pattern. So we're still kind of waiting on which way this is going to resolve. The bulls are trying to push this to the upside right now. We are at the upper end of this range. Above 2,700 or so, that would be more or less the upside breakout level, or point of victory for the bulls. If we get a weekly close above 2,700, that should start to shift in their favor to perhaps the upside on a continued move. Or if you're a little more conservative, you could use the highs here from the 20th, right around 2718 or so. A breakout above there, close there on a weekly chart would bode very well there for the bull case. On the downside, on the flip side, we'd be looking at more or less the last 2 weeks lows here, right around 2,600, these low 2,600s. If we start to roll over here and start to make a move back to the downside, that is where we would start to have a high stakes support level to hold. Otherwise, that breakdown could start to take shape here on this big picture. So that is the weekly bigger picture in the S&P 500. Let's move down to the daily chart now of the SPY. We'll switch over to the SPY ETF, and here is the daily chart with a couple of levels drawn on here, 266 and 267. I've been talking about this kind of point of control, this area, this inflection point on my charts here for the past couple of weeks, or probably a couple of months at this point. And you can see we are still right at this level. And I want to start to, let's sort of rank where we stand in some of these major averages here. So if we look at all four of them, it's the Russell 2000, which is clearly out in front leading. We've been talking about how this has been the best looking of the bunch here. If we go to a weekly chart, you can see there's some momentum building here, even on the weekly chart, 8 and 20 period, nice bullishly aligned and rising. We're above the prior 2 weeks highs. That is a constructive sign there for the Russell 2000. And we are very much, very quickly approaching the highs here from the 18th. And that is only, as it stands now, about 2%, less than 2% away from making new all-time highs in the Russell 2000. So very much the front and center bullish candidate here for the bull case. Behind that is the NASDAQ 100 now. The Qs, triple Qs on the weekly chart, you can see it's got some upside momentum going, bullishly aligned 8 and 20 period moving averages. Talked about some of the influence there that Apple had on this weighting here last week on the monster earnings and move that it saw. So the Qs also building that momentum. So here's a nice kind of secondary candidate in the bull case. And then you get the S&P 500, which is more flat, much more choppy, and hasn't quite got that upside break of these short-term levels. We still have this horizontal level right around 267 or so, last week's highs. You could draw a couple of different trend lines extending from recent highs or highs going back to March. You can see we're kind of battling that. We did break above this shorter term trend line this week here, or after the follow through of last Friday. So you can see the S&P 500 just really at kind of that choppy, messy inflection point right now. It's at the top end of some recent range or some recent technical levels here, and we're waiting to see if this can follow the Russell and the Qs to the upside and get that breakout on the upside. And on the kind of fourth here, bottom of the barrel, is the Dow Jones, which again, still even on these moving averages here, you can see they're still bearishly aligned. So you still have the fast moving average, the 8-period EMA, below the 20-period. So that still shows you that there's hesitation here, that we don't have an all clear sign. We're bumping up against these declining trend lines that extend back from February and January highs. So you can see again the Dow top end, upper end of its recent trading range, and bumping up against some technical resistance. Can it actually get a breakout here? Can it start moving north of 245, or does this in fact roll over and help kind of bring the rest of the market down with it? So it's this tug of war right now. We got the Dow and the S&P kind of versus the Russell and the Qs, and we're waiting to see which pair is correct here, which pair is going to help lead us to the promised land, if you will, to get that upside or downside momentum break in this bigger picture pattern. So that is really kind of the technical landscape we're looking at for the equity market, U.S. equity market overall. I think, again, the IWM, you're getting some nice momentum there. Individual stocks are working. S&P, Dow, you're still getting some mixed signals, still a little bit of a choppy market there. So don't quite have full all clear signals across the board. So that is, I think that really sums up. I don't have too much else to add. I think the levels here are all pretty clear, and I think we're just kind of waiting for that strong weekly close. We've had a lot of intra-week fake outs. We've had some turnaround. Wednesday and Thursdays have been turnaround days that we've seen over the past several weeks, month or so of trading. So let's see, do we get another upside break for the first half of this week, and then do we sell off into the weekly close? That's again that kind of pivot on that Wednesday, Thursday, something we've seen. So we'll have to pay attention to that this week and see if that holds. So that is the equity market overall. I think you get some mixed signals, you get some leaders, and you get a little something for everybody. Let's get into some of the other major markets here. We'll go to TLT next. Down slightly on the day, down a little bit more on the week, but just about 0.25%. So it's the exact inverse of the S&P 500. Still in a tough spot here on a weekly time frame for the long treasury bond here, TLT. You got declining fast moving averages on the weekly chart. We are above, and we did bounce off of this 117 level, which were the lows here back from earlier this year, and a significant level back in early 2017. But for now, I'd say you're at best range bound, but still in the context of some of these declining weekly moving averages there. So it's kind of a tough spot for Treasury. Let's go to oil next. Down slightly here on the week. It had a very high volume day today. We had some news impacting this. All in all, very wide range trading day, but closed almost flat here, right around $14.06 on the day after being down all the way $13.68 or so on lows. And just take a look at the volume coming in. We got rising 8 and 20 period moving averages. So the trend held up. It is still holding up intact, and we are still holding this breakout level despite the intraday breakdown of it. So for now, the USO, the oil bulls are still in control here. If we start to get a rollover here into the end of the week, if we start to lose $14 or so, then you might put the brakes on, especially when this type of volume coming in with a potential rollover. It's not the case now, just kind of giving the advancement there if we do see that into the close. Otherwise, I think you got to respect the trend and stick with this market until proven otherwise. So that's USO. Let's go to, actually we'll go to natural gas next. Kind of sleeping again, not really doing a whole lot, still kind of bouncing around in between 23 and 22, call it. This nice round numbers here on the UNG, bottom of the range down here, 23, kind of the upper end of the range, waiting for that breakout, waiting to see if this can start to get some more directional movement, directional momentum coming into it. For now, looks like it's just kind of sideways and fueling up for that eventual move. Finally, we'll go to metals. gold. We talked about this breakdown in gold, the significance of it, or the certainly the significance of it early last week. But and we talked about really needing to see a weekly close down here to really kind of seal the deal, or to put the favor in the sellers at the bottom end of this range, and they really didn't do it. If we look at the weekly bar, we did save just enough face here in gold, 124.50 or so. We did manage to kind of get a bounce, a little over $1 or so bounce off of these lows to help kind of save the structural integrity of this market. And so far, even this week, it's trying to hold on here. So it is interesting. I wouldn't count this out yet. It does look vulnerable at the bottom end of this range, but buyers have been supporting here, and they continue to look, appear to be so far. So, again, weekly close is going to be important here for gold as it tests this multi-month support level. And finally, silver down just slightly on the day, but relatively flat, all things considered. Had a bit of a wide range, but again, very much in, holding up within this sideways channel that it's been in since February. So we had this, brief sort of breakout that failed very quickly and swiftly, brought us back to the lower end of this range. We reversed and pushed back up here. So really sitting tight and just kind of waiting to see which way silver resolves. Got to get a move either below 15 and a quarter or above, call it $16 now, or if you want to use this, this failed breakout highs up here at around 16 and a quarter, then that's the breakout level you'd want to pay attention to. So that covers everything for this week's midweek video. Thanks so much, as always, for watching every Tuesday and Friday, and then we're trying to do some trade ideas on Wednesday of every single week. So do subscribe to our YouTube channel if you would like to stay updated with all of the latest videos that are getting uploaded. So thank you so much, and talk to you tomorrow.